Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, May the 21st, the year 2018. Let's talk trading. Okay, the new topic or the topic of the week, why you do not get better at trading. This is part one. I could actually do 5 or more parts, but I'm going to try and condense it into about 3 days because a couple of them are closely connected. In fact, the first two are. Number one, you're not trading enough. Now, as I mentioned last week, I was watching a video about getting better at playing bass guitar. And I listened to it and I thought, wow, a lot of these things could be applied to trading. So in the case of bass guitar, it's not practicing enough. So you're not practicing trading enough, and in trading, you're just not trading enough. Now, as you know what the next screen says, got money and risk management. You can trade for a dime a pip. Now, it would take you a long time to get rich trading at a dime a pip. But as far as practice goes, maybe that's all you should do. Maybe your first trade of the day should be a practice trade to see if you're actually trading properly. If you're actually doing what you need to be doing. One of the things being putting on your stop loss and possibly your take profit. Maybe you're rushing the trade, so your timing is off. Maybe you're revenge trading. There's so many things that you could actually be doing to your detriment. But I don't have to tell you what they are. You know what they are. Especially if you've been doing this for a while. We all have blind spots. We all have weaknesses. We all have a tendency just to throw a trade out there just because. That's not trading. That's gambling. So you're probably not trading enough. Let's go back to the... So that's one of the reasons you're not getting better. You just simply aren't doing it enough. Now, the second reason, which is closely coupled, is you're not trading consistently. Okay? You were not trading consistently. And it goes back to what I said in practicing. Your entries are erratic. Your exits are erratic. There's no consistency. Maybe one time you're using one indicator or method, and the next time you do something else. Basically, you don't have a plan, or if you do, you're not executing your plan. So if you have a plan and you're not executing it consistently, then you're not trading consistently, and you're not going to get consistent results, except maybe for losing. So those are the two things that I want you to keep in mind, that you're not trading enough and you're not trading consistently. So let's go back to the idea of the dime a pip trade. So with that dime a pip trade, you can practice your consistency. Okay, in other words, are you doing that as your first trade every time you trade? If you can't do that one simple thing, if you're so afraid that, oh, that first trade's going to be the whopper that you miss for that trading session, then you're not trading consistently. You're fooling yourself. The other thing is, are you trading at the same time day after day for the same length of time? I mean, if you get up, say you want to trade the New York session, but you miss the open 2 or 3 times a week, you're only there once or twice. That's not consistency. No way. No, you got to be there every day. You got to show up. And then if one day you trade for half hour, the next day you're in there for 3 hours, then you're back for an hour. No, that's not being consistent either. What you have to do as a trader, you have to set up the parameters and then stick to the parameters. You block off time so you can have nothing but focused trading. Okay? Does that make sense? Focused trading. Maybe you only have an hour a day, but during that hour, you can focus and you can maybe find 5, 10 pips or more in that hour. And it's possible. So, just to sum up, why you do not get better at trading, part one, it's because one, you're not trading enough, and two, you're not trading consistently. So let's move on and look at the money and risk management screen. So now that I've beat that into your brain, this is something I expect you all to do. And if this is your first time, then tomorrow, your second time, I expect you to do it. Trading consistently. What do we do? Well, on this particular screen, we would trade the gap fills at Sunday slash Monday difference between the open and the close last week on Friday. On this weekly screen, we would trade a weekly breakout. We would trade the weekly open. And we would do it every time. We wouldn't second guess ourselves. And I think we looked at something else here yesterday. I think we were looking at the Aussie pairs. You see we've got a couple that filled. Euro Aussie still hasn't filled. Pound Aussie still hasn't filled. Look at that. Right off the open, 135 pips. Pound CAD, 100 pips off that weekly open. You can see here we had a breakout of the previous session's daily session high right there. Good for about what, 31 pips had you taken that trade and taken the money off the table. So, and once again, you see it broke out of that wick zone. Once again, consistency. Got some ranges over 100. Got the dollar yen, 57 pips. Looking at the buy zone, you got two opportunities. Simple trade, once again. A lot of times beginners will ask me, well, how should I start? What should I start with? Basically, you can do a buy zone trade if you're going to trade somewhere at near the open, or because here, sometimes you're not going to get one. Other times, maybe during the New York session, like right here, New Zealand, you had an opportunity there. Let's see, last hour or a couple hours ago, you had an opportunity here to go short, pick up just a few pips. Once again here, a few pips. Rat trade, there we go, last hour. Opportunity, trade the rat. And actually, if you were dropping down into the M5 time zone, you see here we definitely had a rat reversal. Green, red, break at the low, inside the rat zone, proved to be profitable. And you see here, price opened and started to reverse. Could have scratched the trade. Then when it came back down, there was a possibility for a re-entry. Or had you just employed your stop loss here with the correct position size, you'd still be riding that trade. You can see here there's not much distance because once again, I've only got a 57 pip range. So between here and here, we've got 17 pips. And for those who like to trade from the open to the pivot, almost made it, but not reversed. We had 3 H4 bars in a row going up. Now we're in the second one. Reversal. So actually counting from Friday, 1, 2, 3, 4, looking for that buzzard reversal. For those of you who've been with me a while, you know what the buzzard reversal is, which is 3 or more bars in a row, same color. Look for a reversal. Now, remember, number 2 was not trading consistently. Every video, you pretty much hear me say the same things over and over. That's consistency. You got a 3-ball H1 candle red at the line, profit to be made. Didn't make a higher high right there. Red at the line, profit to be made. And once again, here. Now we've got a 1-ball. It was green at the line. There was profit to be made. Didn't break the high. Struggled, and you could just take the pips. You can trade based on the spread dots indicator, pinpointing your entries and exits. I think I need a new mouse. Thing is, this is a new mouse. Only had it a few months, but for some strange reason, it seems to double click itself. Once again, using the lines of the previous daily sessions, daily candle or previous daily candle. You see here, green at the line, profit to be made. You can see we've had a lot of crossing of wick zones. Once again, simple trade. Wick zone trade. Holo setup, touched, came back down. Nice trade right there. Nice opportunity. That would be an advanced trade because those who are beginners would want to wait for a bear candle to open in the zone and trade out of the zone that way. More experienced traders know a return to the zone sometimes means right here, maybe you take that entry. It says, nope, can't go any higher. It's going lower. And simply looking at the tick chart here, you can see the ask broke the peak, came down, and there were some pips to be taken. Once again, looking at spread dots, IRB opportunity, very nice one right there. This one did not pan out, made it up on the short side. So that's it. Remember, it's not what you trade, it's how you trade it. Trade it consistently. Now, let's go and drain the banks.